champion Samsung, right? And he's been very happy with it. He's free to comment down below, and he can tell you if you're going to buy a TV. And Samsung, if you're out there and you want to be a sponsor of mine and you want me to advertise at Vincenzo's Go Crypto Investing, now's the time to reach out to me before some other company entices me. But I am a loyal Samsung user, and I actually have my whole kitchen Samsung. Dishwasher, stove, and it's all stainless steel because like I told you, I'm a flashy guy. I like the chrome, and I like the stainless, and I like the flashy look on my shit. 65-inch Q70, it seems like a fairly new one. That'd be one I'd be looking at. Oh yeah. It's gotta have the 120 hertz though. I'm watching hockey and shit. Can't have none of this 80 bullshit, you know what I mean? But that's for another time. Let's go to what I wanted to look at. We want to go to the Consumer Price Index, 12-month rate of change, because Commodity Monday's tomorrow. As I smoke some hashish and mota, right? Oh yeah, that's some good stuff right now. But down to business, you know. I'm sick of talking about crypto coins, for lack of a better word, because they had to use the word coin because they're trying to sound like gold and silver bullion, right? I'm shocked they didn't call it crypto bullion coin. You know what I mean? Go full copy mode. The 12-month rate of change consumer price index, all items you can see have skyrocketed. We know that. Natural gas is the one nobody expected, is skyrocketing and nearing a 10-year high, right? That's crazy. No one expected natural gas to be moving up because it's suppressed by the federal government to keep natural gas prices down. Yes, Tiny, it's very muggy. So we're going to close that window because it's very muggy out there. Yes, it is. Oh, you're all wet now. Yes, you are. Yeah, he's all wet now, but he likes it. New vehicles obviously have skyrocketed. You don't need no one to fucking tell you that, right? Natural gas. Commodities, less food and energy, we know have skyrocketed. Medical care, somehow they're saying that's down. Services, minus energy services have skyrocketed from their COVID dump. Education and communication skyrocketed because the government's involved in that. Medical core commodities skyrocketing because government's involved in that, right? What else do we got? Average price data, US dollars. Oh, this will be a good one. Oh, this is where we do our chickens. Bananas per pound in US dollars over the last 20 years. You can see bananas used to be 51 cents a pound. Now they're 60 cents a pound. So the bananas are winning. The US dollar is losing to bananas. Oranges, navel oranges per pound used to be 79 cents. Now they're at $1.37 20 years later. So bananas and navel oranges are winning against the US dollar. If you would have loaded up on bananas back in the day and had a way to keep them fresh, you would have held your purchasing power when you traded off in bananas better than dollars. As we know, the chickens are killing the US dollar. It used to be $1.10 chicken fresh whole per pound. Now it's at $1.52. We already went over eggs. Look at the eggs. The eggs are beating the chickens. Eggs used to be 86 cents a pound. Then they had a huge spike in 2015 to $2.97. Then they crashed, but they're still at $1.62. So the eggs are killing the US dollar. Utility piped gas. I thought it'd be interesting. It used to be 99 cents. Now it's $1.14. You can see everything. Tomatoes. Tomato field grown per pound. It used to be $1.94 or $1.24. Now it's $1.89. You see how the dollar is being devalued? The bananas, the bread, the chickens, the eggs, the ground beef, and the milk and fresh foods have not changed. It's the same chicken you bought 20 years ago. They're the same fucking bananas you bought 20 years ago. The only difference is now is they've devalued the United States dollar by that much of a percentage over the last 20 years, right? It's not that difficult. Those chickens and bananas and hamburgers haven't changed. The only thing that's changed is the purchasing power and the value of your fake fiat currency, because we know it's not money, because the one thing money must have to be money is it has to store value over long periods of time, hold purchasing power. Fiat does not do that. Currency, otherwise known fiat currency, does not do that. It dramatically loses value over time. The only thing, real money, God's money, in Robert Kiyosaki's words, is gold and silver bullion, and that holds value and increases purchasing power over time. That's what makes it money, right? Look at way up here, 4% year over year change in energy commodities. It's fucking crazy. Right, 2.4% annual CPI for 2020, 172.2. Annual CPI for 2020 is 257, so it's almost doubled. Here's the graph for the selected date. See that? It's disgusting, right? So you're losing value like a motherfucker. And another powerful tool you can use is this. Yeah, this different calculator, the same. And this has got a lot of good shit in it, though. Look at that. You can see it's got the CPI, the 12-month rate of change. Inflation, all items, 5%. Food, 2.2. Energy, 28.5%. Core inflation, all items minus food and energy, 3.8%. Inflation marks quickest pace since 2008. This is a very big thing here. I'll go into this more tomorrow. U.S. home prices. And this also shows the power of owning gold and silver bullion. But for this purpose, is gold. Look at this. Case-Shiller U.S. national home price in U.S. dollars and gold. Now, U.S. dollars is in blue. It's starting in 1975. You can see it was cheaper than gold. You had to have more gold. Now you fast forward, you have to have 20, 40, 60, 80, 120, 40, 60, 80. You got to have 10 times more U.S. dollars since 1975 at current, or this isn't even current year, this is as of about 2018, to buy that same house. Versus gold, you need a lot less, and it's even less now, gold, to buy that house, because gold holds its purchasing power, U.S. dollars do not. You know what I'm saying? This one's the big median sale price of new homes, median sale price of new U.S. Homes in U.S. dollars and gold grams. So back in the day here, you needed 10,000 grams of gold to buy the same median house. And you needed $10,000 in 1963. Fast forward to 2021, and you need about 7,000 grams of gold, so you need less because you've increased your purchasing power by a lot. In U.S. dollars, you need about $420,000. So you've needed 300 times more U.S. dollars since 1963 to buy that same house. When gold, if you just held gold the whole time, you need less gold than you needed back then to buy that same house, because gold is holding and increasing its purchasing power decade over decade, and fiat currency, fake money, counterfeit, loses value because it's debased, and central banks around the world expand it and print it at will, right? That's why you need to own gold and silver bullion. I mean, look at that. It doesn't get any better than that. It's the best graph I've ever seen for owning gold. Look at that. Gold in red, dollars, fake money in green. Look how much more you needed in fake money since 1963. And look at the spread difference now. They've started at the same. And look at the difference. Gold's holding its value beautifully and increasing purchasing power, while fiat dollars and fake money loses purchasing power and is debased, and you need more and more and more as the years go on. Yeah, see, January 1963 to April 2021. That's why you have to work longer hours every year to pay increasingly higher taxes for a shittier standard of living year over year, because your fiat money is losing value because it's not money, It's fiat. It's currency. Currency is not money, was never money, and will never be money. But the people that understand that hold gold and silver bullion over the decades, and their standard of living goes up, and they have to do less work, and they have more time for relaxation and leisure, right? Because we all love leisure. None of us like going to work. Like tomorrow when I got to go to work, I'm not going to like going there, right? I like the people I work with. I don't mind the job that I do. So it's all in all, not a very bad spot to go 60 hours a week, right? Because it's a good place to work, but I don't like doing it. I would prefer to be on a beach earning 20%, right? But we'll go do a little silver and gold chart. Guy here with the crypto, I don't want to look at that shit. Gold tried to bounce back, and from a technical perspective, you can see gold had a huge rally last year after the COVID dump. Where was that COVID dump? Right there. Look at that. It was already in the middle of a bull market, and then it came all the way down to $1,200. And then from there, it skyrocketed. Look at that. 43% or $634. And since then, it's been, I hate how it doesn't show me the volume until I'm under the weekly. You had upper resistance and lower support, and this is otherwise known as a bull flag and a bullish consolidation in the middle of a bull market, right? You got to have these consolidations in a bull market. And you say, well, how the fuck do you know that, Vincenzo? Because look at this. Here is a smaller one there. See it? Same thing. Smaller one there. Here, we'll start putting some lines out. Just so you can see this. Look at that. Bam. But we're going to make these smaller because they're in the back. Then we'll clone that. You see that? Look at that. There was one. Do you see that? Kind of looks awfully similar, right? Just smaller. Here is another one right there. See that? Steve Van Meter. I'm going to listen to that after I'm done with here. He has very good information. Although I don't have the same take he does on bonds. Although I did make money in bonds last year. I made about $1,500 because of him. So props to him for that. He's a very smart guy, though. I would highly recommend that you guys follow Steve Van Meter. At the very least, he will increase your financial knowledge, which is your education in financial education, and that will make you smarter and more savvy at generating money and getting out of the shithouse, right? Like old Vincenzo did. See another one right there? See that? Kind of see what I'm talking about there? I mean, can you guys see that? If you can't see that, comment down below, and I'll find a way to make it better. See that one? See that? No, that's just a bigger one. Usually they don't form them for it was 10 months before it attempted to break out, and now it's retesting it. But you see that? It's the same thing as we zoom in here. Super simple, easy to understand technical analysis. Top 1, 2, 3 in a breakout. Underneath support 1, 2, and 3, and then it broke out, right? But then after it broke out here, it did come back and back test. And now as we zoom in, oh, that's right, Vincenzo said zoom in. In super simple, easy to understand ways, how to trade this market, right? You can see what we did here. You broke out. Is this the one I wanted? No. I think it's back farther. You got that one? Nope, it is this one. So look at that. See that? The first time you had a fake out here. See this? And then you tanked. And then you met and built the base at the bottom for support. Then you broke out. See that right there? But then when you broke out, you came up, and these are daily candles. So you came up here, and then you came back down and straddled this the next day, and then you pumped. You back tested it. And that's what you do usually. This one just did it really quick, right? And I think that's the phase we're in now, but it's a bigger pattern. So it's got to have a bigger back test. And this one, you see it again beautifully. You came in a bullish look, pumped up, upper resistance 1, lower support 1, upper resistance 2, lower support 2, confirms the pattern, upper resistance 3, lower support 3, confirms the pattern again. Then you started building a base, and then you tighten the range. You see how it got tight there? Look how tight it got there. Let's zoom in. That's right, Vincenzo said, let's isolate and zoom in. See how this got really tight here for the last few weeks? It was building energy and coiling to pop through, and it had to build enough to bypass the duck hunter and not get shot down into the duck grave, but to get flock past there and to come up in the duck utopia, he built up enough steam after he's seen the other ducks, bam, get shot down. The other duck up there, bam, get shot down. So he built up enough steam and popped. So when the duck hunter pointed and fired his 12-gauge shotgun, he missed. And then the duck flew off in the duck utopia and ate his happy meal. And that's where he's at now. And he was ascending beautifully until COVID, the panic crashed. And then right after, the gold buyers started buying up because they said, oh, wait a minute. And you say, well, what the fuck caused that dump there? Thought it's a hedge. It is, but when everyone's getting liquidated in the stock market, they got to sell stuff they're up in to pay off their margin and their other things they must pay off. So they sell what's in profit, and then after they settle those, they start buying the shit back out of it because the people down here say, thank you for giving me the gold $400 off, and let's ride, right? And now gold's doing what it needs to do. Ah, fuck. We got to do that now. That's what happens when you've done that a few times. Now we gotta get back to where we were. We were down here. Oh, no, I deleted what I had there. We gotta put that back on. Hold on. Just so we have this for quick analysis when we want to go back. Then we have this one right here. Right, and you see how similar that looks to the one up top, right? I mean, it's, except the one up top's massively bigger. And you say, well, how the fuck do you know where the targeted move is? Well, it's simple. You go from the bottom of the pole, which was down here, to the top of the flag, to the point of a breakout. Look at that, it hit it beautifully. And then the same thing for this one. You go from the bottom of the pole to the top of the flag, to the point of the breakout, and it hit it beautifully, but it got interrupted right there. It got interrupted with their industry exclusive pointer tool. Look at me, I'm down here. Hello, I'm Vincenzo, hello. It got knocked down there because of COVID, and then it pumped. You know, it recovered from that. And now we're in an extended, look at that, it's the same thing, except instead of the other ones lasting a few weeks to a month, this one lasted 10 months since August of 2020. And you see upper resistance 1, lower support 1, upper resistance 2, lower support 2. And then it came up, lower support 3, and then it popped out. And now we popped out, now we're back testing. And I think, I could be wrong, it could come back down, way down here, and then move up, right? It could retest that get your shit together box. But it seems like we're back testing now. And it's building up and consolidating to pop up for its next move up. But if this is a bearish consolidation pattern, this would be what you're looking for in a targeted move. I don't know what that's doing up there. You would say there's, we're calling it to make this, you could say this is a bearish consolidation pattern right there. And then if it breaks down out of this, its targeted move would be from the top to the bottom to the point of a breakout. And that would bring you probably in the weekly to some moving averages. Yep. Almost to the 200-day moving average, which would be a great spot if it fell to get supported. And I would buy a ton of physical gold, and I would load more up and average into my mining stocks, because that would be a big fall from where it's at now. In current price, that would be an 8% move. So I would be doing I would be buying a lot in. But I think in a probability-based way, you're more likely to hold this as support, maybe come down here to this bottom, which is just so happens to ride in the weekly time frame on the red line, which is the 100-day moving average. And you could come to there, and then I think you're popping, because I do believe by the end of this year, maybe sooner, maybe late fall, you're coming up to this target way up there at nearly $2,300. And you say, well, how the fuck did you get that target, Vincenzo? Because I think we're in a bull flag, and you'd go from the bottom of the flagpole, which was the COVID dump in March of 2020, to the top of the pole, to the point of a breakout. And if that was the breakout, it'd be up there. I thought the breakout would be more down here, and then that would line up. But if that was really the breakout there, then you have a $2,500 target, right? I think that's where you're going in gold. And in silver, I think you are in a ascending triangle. And these can go bullish or bearish, and they generally, to know if they're bullish or bearish, they usually if it's happening in a bullish pattern, a bull trend, then it's a bullish consolidation pattern. If it's happening in a bear trend or a bear pattern, then it's a bearish continuation pattern. And you say, well, what the fuck's an ascending triangle? Well, hold on, let me show you real quick. Calm the fuck down. Show you some of my method to my madness. So, you fuck. Come on. So we're going to put some little drawings on here just because I want to have some fun. Arrows. So you can see 1, clone. 2, right? See that? Clone. And then 3, the last time. See that? Make these different colors. See these? The orange 1, the red 2, and then the white got rejected for the 3rd time. Then if you look down here, you got 1, and then we're going to clone it. You got 2, and then we're going to clone it. You got 3. And we're going to make that color. We're going to make that purple. And we're going to make this one blue. Then the blue's 1, the purple's 2, and the yellow is 3. But they're higher. The purple is higher than the blue hit. And then the yellow is higher than the blue and the purple hit. So you have higher lows. You see that in super simple, easy to understand ways with our perching tool. You can see low, higher low, higher low. So you have uptrending support and horizontal resistance. Hit orange, hit white, all at the same level. That's an ascending triangle. You have horizontal upper resistance at the same spot, but you have uptrending support. That's an ascending triangle, and this is obviously from the COVID dump of $12 to the high of just over $30. This is obviously a bullish pattern because you're up nearly 150%, I believe, from the bottom. From the bottom to the top, you're up 160%. At current price, you're up 125%. So this is a bullish continuation pattern, and the targeted move would be from the bottom to the top to the point of a breakout. And we have a lot of time left in this pattern. We have actually about a year left that we can run in this pattern. And in gold and silver, I would not be surprised for it to bounce around. But you can see on the breakout, Vincenzo has targets up there of $48, nearly $50, which would be something we haven't hit since 1980. And then the market was manipulated down. But we still have a lot of time in this pattern. So you could come back up, come back down, come back up. But they don't usually go all the way. So I would say by the end of summer, beginning of fall, you're going to have to break out of this by here. So you're going to come back up, and then you could briefly crash real quick, and then I think you're going to pop. So I've been accumulating the whole time in here. I've been buying. I bought here. Hey, a new subscriber, Richard Palacio, has subscribed. Welcome to the network and the radio station and our community at Vincenzo's Gold Crypto Investing. I bought here. I bought here. I did buy up there. Then I bought here, 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 and here. So since it peaked in here, every time it's crashed, I've bought support in physical, right? And mining stocks and silver stocks. But I think we're going up there. I think this is an ascending triangle. And I believe we're going to eventually ascend to this $50 target by the end of this year. I'll go more into the mining stocks later. GPL, AAU, B2 Gold, Barrick Gold, Kinross, and all the rest of them. Fortuna Silver, right? Like, subscribe, and share Commodity Mondays. There's going to be fiery tomorrow. We're going to have lots to talk about. Peace and love. Peace and love.